Investments Market View commentary for Monday the 2nd, 2026. We are already in February. The year is running by. One of our 12 months is already down. You guys should have seen a pretty good return in your portfolio last month. Hopefully all of you took a look. Hopefully all of you enjoyed last month's return. But a couple things came up, and hopefully we can talk about it tonight. Let's talk silver and gold thoughts. If you were to ask me, I typically do not invest in gold or silver. And I typically do not invest because they are news driven. For years, people were talking about silver going to $50. And it took like 30 years or 33 years to get back to it. I'm not impressed with the overall return of gold. And really, just go back to the year 2000 and look how long you have to hold on to these positions. Now, silver has run like 300% before the 32% pullback, which 32% of that is one of that 100% that you've run there. And do I think silver is going to go to a tenth of what gold is? No. Silver should not go to $480-ish to be a tenth of the price of gold. Kevin, why would you say that? And the most interesting part about it, does anyone know what the connectivity or conductivity of the next element is that's closest to silver? And yes, I know silver is going to be in, silver's in computers and defense and all these different things. Do you know what has 93% conductivity, or 90% of the conductivity of silver, what that precious metal is? Ooh, Lee, you got it. Copper. It's copper. There's no super need for silver and defense. There's no super need for silver for the conductivity in high-end computers. There's no need that something has to be silver. Copper is going to be close enough. So, a couple of the things that possibly have moved it, and I'm just going to say these out loud. A make-believe short covering by major institutions. And a couple of those would be JP Morgan, Goldman Sachs. There's quite a few that are out there that have rather large or had rather large short positions on silver. Now, did they have to cover, or did they all choose to cover the way they did all at once? Maybe. It only takes one big domino to knock down a bunch more. But should the run on silver and gold continue? If you ask me, no. It is a supply and demand. And yes, there are some silver holdings that have basically said, no, we're not going to give you silver back. We're going to give you cash back. We cannot give you back the silver that you own, but we can give you the cash for the silver that you used to own. So all those people that got suckered into, hey, you're going to hold real bullion, it's real silver bars, we're holding it for you, we're charging it for you. All of you people that got charged for a company to hold the silver for you, and now they can't send it to you, they're just going to send you cash, you should sue the living crap out of them, because they've charged you for months at holding real silver. And now that they might not have enough of that silver, you shouldn't have been charged for it. Go ahead and sue the crap out of them if they're not going to deliver the silver bullion to you, the silver bars or so forth. Would I be investing in it now on the pullback? No. The run up didn't make sense. The run down doesn't make sense. Can we use silver and gold as a barter system when the world all goes to hell and the second coming comes? No. There's not enough of it to go around. You don't have enough silver. And let's face it, if you needed guns or ammunition, clean water or food, would someone sell you their food or water, ammunitions or weapons for silver if it gets as bad as some people think it's going to be? I wouldn't. I won't need any silver. I'd rather have the food. I'd rather have the clean water. I'd rather have the firearms and the ammunition. So if you feel like you've missed the run, you've missed the run. I know some of you have gotten to sell my silver coins and made a great killing off of that. I would not believe silver's going to 400 or 500. It is a supply and demand, but is not inflation driven. It's probably in all honesty, it's probably some big short covering, and it's probably blown out of proportion. Am I a fan of having gold and silver sitting in your portfolio? No, it's not really been an inflation hedge. Has it helped in the 2008? Well, yes, but then it took, what, 16 years, 17, 18 years to double in value again? Is it something that should be sitting in your portfolio right now? Probably not. If you have silver or gold, it might be a great time to get out of it. It's just something that sits there. It's something that it would be smart to take a profit on. That's my thoughts about your silver and gold and what's happened to us here recently. Living trusts. I hope most of you have yourself a living trust. And the short answer is a trust is much cheaper for the kids. What's the word I'm looking for? Probate. Thank you, Nathan. I should have asked my lawyer. A trust is much cheaper for kids to probate because the directions are already in it. And it can, but most likely won't go to court. So much cheaper. It is something that is the way that you should go. Now, a trust does have a living trust does have a pour over will that is part of the trust. So that if there's anything you've forgotten to list in the trust, it'll pour over into it through the pour over will, which is a part of the trust. Now, something that I've seen are legacy trusts, or creating through documentation or through amendments a legacy trust part of the living will. And that is simply done by amendments. Can't type. Amendments that are distributing your funds over a period of time. And so this is the short answer for me. If my stuff was to get liquidated, properties and so forth, I would probably end up totaling around $5 million. And I have one kid that doesn't have the capacity to manage that kind of money. I have two kids who will spend it and it'll be gone in a year. The legacy trust is setting something up like when the funds are totaled, 25% gets divided among the kids. In fact, what I would probably do, well, I guess that would be kind of not the smart, but if you took 5 million times, it'd be $1,250,000, right? So each kid would get roughly $208,000. 5 million portfolio, 5 million payout, properties and so forth. 128K per kid. And the remainder, 3.75 million, pays out over the next 9 years. And on the 10th year, which would be the 9th year, because we're going to give it, well, and on the 10th year, it gets divided out equally for whatever is left. So that allows that money to grow for the next 10 years. For 10 years, that money can grow with Keeve or with Brian. It can turn into 3.75 million, might turn into 10 million over that 10-year period. So each year, maybe it's the anniversary of my death, when kids are going to be so sad that mom and dad pitched ourselves over a cliff in a fast car. They'll get a payout of 10% divided equally. So if 3.75 million grows to $450,000 will be divided 6 ways in my family, and they'll get that money. And the next year, it's a flat year. Maybe it's only a $60,000 growth. Each kid will get 10,000. The next year we get a 42% growth, and all of a sudden it's back up to $5 million. It's actually back up to 6.25 million. The kids are going to get 10%. It's going to equal pretty close to what that 25% was. And it gives your kids, for lack of a better term, it gives your kids a lack of responsibility, and your money can still grow for them over a period of time. This is a great idea for people who are worried about kids blowing through the money. It's a great idea if you want to save a certain portion of the money for grandchildren. I've seen this where an individual has said, hey, My kids are all great. I want to give 25% to the kids, and then whatever you're able to grow the account in the next 10 years, Kevin, that goes to the grandchildren. It's going to go to pay for cars and education and those kind of things. There's a lot of ways that a legacy trust can continue to pay money out once we're gone. Do I like it? I love it a lot for my family. I love it a lot if I'm one that could be managing the money. It's totally in the Hurley Investments best interest if you wanted to do a legacy trust and have it grow the way that it's been growing. But this is a great way for me to protect my children from their greed. And I love using a trust over a will because there's no argument. I've been very specific. I spent quite a bit of money on yearly updates on my trust where some kids are going to get certain things and some kids aren't. A lot of my gun collection is going to a couple of the boys, a couple of the girls. It definitely will not go to two people because of who they married and their mental capacity. They're just ways to make the trust fair and safer for your kids, especially if they go through a bit of an argument, especially if they don't like the way it's adding up, especially if they don't agree with the executor who's going to be doing the majority of the work. A trust solves all those problems so that when you're gone, you don't have more problems within the family. And a legacy trust can keep your legacy alive, can something that they can remember you by way into the future. And I like the idea for some of my kids because of who they are, is the best way to say it. All right, Meta. Beat top and bottom. It was kind of neat. It was awesome. Let's face it. 888 versus 821. The earnings per share. Revenue. I think I have it at 59,555 billion versus 58,378 billion. And the most important part, what made this likable or helpful, was Meta and Zuckerberg is cutting down on wasteful programs. Now, the way I read it, still spending 116 to 120 billion on AI, but not going to the metaverse, not going to wearables anymore, not going to a lot of different things that have been a complete waste. So we did good. We did really good. On the 710s, we dollar cost averaged them by taking off the 800 shorts. We then used that money to buy the dollar cost averaging portion. We sold off the original ones, and as of today, we created a risk-free profit trade. The $61.95 was completely bought by the profits off of the short calls. We closed down the original 710 calls for a slight profit, And we now created a risk-free trade using risk-free money. For those of you that are new, the long calls were completely paid for. And I went over this, I think, 2 weeks ago, if you'd like to see that video. These long calls were completely paid for, dollar cost averaging, by taking off short 800s. Well, we added 800s back on. And not only was the 61.95 completely paid for with short calls, we now made sure that was completely covered by short calls. So here we have a risk-free trade on risk-free money that we already had in place. If this trades below 710 by January of next year, you're still making $69.45 because this was paid for by a short call previously. If it goes up to 800, you're going to keep almost $70 of credit. $62 almost was made by a covered call credit previously. So there you'll keep roughly $130, and you'll make the difference between the two spreads. It's an amazing way to look at the portfolio. Now, we've done the same thing again. For those that had the 750, 850s on, we took the 850s off. Our original payment was $130.74. We bought a second set at $47.25. That was completely paid for by short calls. Not only did we try to be witty and smart, but we did the same thing, giving ourselves a $100 spread by today selling the 850s again for $49.85. These are completely paid for, lowers our cost basis here. Once again, we've got ourselves into a net trade as we went through it all. We're into this trade about $8,400 total now. Pretty good when you've got some profit. And yes, we see we're down 9,500 on those original ones. Pretty neat to be, and that's counting the loss, pretty neat to be down less than about $1,600. And we've created risk-free portions of a trade again. Paid for 100% by covered calls. We're paying for those covered calls that we got profits on with another covered call again. I love the way of being in risk-free trades. I love the opportunity that this gives us to get us those returns that you saw last January. This is the opportunity with Hurley Investments that you're not going to get anywhere else. All right, earnings. I'm going to go through a couple of those as we come up to it. Big picture, all about our new Fed chair. Interesting comment. Kevin, if the Fed chair lowers rates pretty quickly, the new one, Kevin Walsh, it's just going to create higher inflation because of home prices again. Once again, I disagree. The inflation in homes was not caused because rates were too high. Would it have made it easier for people to buy homes and possibly brought the prices down because more people could afford them? Yes. But more importantly, the inflation on the homes is a supply and demand. There is not enough supply of beginner homes or homes that are more reasonably priced in that $250,000 to $500,000 range. There is a lack of inventory in a beginner home. It is literally too expensive for our kids to qualify for a loan on a house that's worth $500,000. Making the interest rates cheaper will push some people down that could possibly, I guess, push them up, right? Push them up to a house payment that they can afford. But definitely, I'm going to disagree. I do not think lowering interest rates will actually cause higher inflation. I think printing money can cause higher inflation because you have to take it out of the system in some way, shape, or form. But if we lowered our housing rates by another 75 basis points, which is what could happen, it probably should happen with Kevin Warsh because he's already, they're already behind the 8 ball, let's face it. It'll be helpful to reinvigorate our housing market. We just need lower priced homes that are back to that, remember the days, 1,300 square feet, 1,800 square feet. Someday you were going to get to like a 2,200 square foot home. That's what is really needed in the market. We need a bigger supply. Okay. Dow Jones Industrial Average in 1 week went from bearish back to bullish. Boy, is it riding. Look how it's riding that that RSI number there. Nice bounce off of the 50-day. One of our 3 indexes is definitely still bullish. S&P 500 in 1 week. We're also bullish. I wish I could type better, right? 1 week, I wish I was bullish. Woo, you got your wish. Good bounce off of the 50-day one more time. And the NASDAQ, ever so slightly, still bullish. Doesn't mean it'll stay bullish. We hope. If you're asking where we think we're going to go up in February, probably only 1.5%. But that's because we are. That's because we kind of feel like this year we're going to have the same type of years last year. That because we had such good profits in the market, it would not surprise me to see. Well, it just wouldn't surprise me to see people taking profits, huge profits that'll start the downfall for just a typical correction, maybe a pullback, maybe a 7 to 10% pullback. Correction might be up to 20%. But if we go through a 20% correction, now with the algorithms, you can almost count on, as soon as it's 20%, you're going to get a big bounce higher. Earnings, Disney and Palantir. Disney beat top and bottom, but their guidance in the comments that the housing markets, their the Disney Worlds and the Disneylands were going to be a little bit slower at coming on and cost a little bit more as they open up a Paris Disneyland or Disney World. I forgot to type all these in, so I'm getting the last little ones in here. Amazon and MicroStrategy, Strategy Inc. now. Tuesday, where's our other one? Tuesday, we have Clorox, Amgen, Pfizer, if you're watching Pfizer, Chubb, Skyworks, Electronic Arts. Wednesday, we have the CME, Yum, Uber, Qualcomm, Google will be the one that we're going to watch on Wednesday. Amazon and Strategy are going to be on Thursday with Tapestry, Ralph Lauren. ConocoPhillips, Cardinal Health. Friday, we just have PM. I should know what that is, and I can't remember. Economic reports have changed. ISM manufacturing, we did great on that today. Positive, 52.6 versus 46.3 or 48.3. Our manufacturing is now in a growth mode. At least it was for the last month. ADP number will come out on Wednesday. Average work week will not come out because the market, the government shut down. Should be refunded and started on Tuesday, but no average work week numbers will come through this week. So because of that, it's not much of something that we're going to worry about. Philip Morris, thank you. Palantir. We already dollar cost averaged Palantir by taking off the short side for the August 200s and buying new ones for $19.43. Palantir had great earnings after the market. The same thing we were trying to do on Meta, we've also done with Palantir. There is a good opportunity that by tomorrow, the newest set of 200s could be very profitable. And we might run these so they can gain 3 or 4, maybe $5,000 to $10,000 of profit. And we might book it again to create a risk-free trade. If this number can get up to $48.66 because this second set was put on by the short call and is all profit, if we could get up to $48.66 on the cheaper ones, we're going to book that profit and create a risk-free trade for you again. That is the ability of using those options for protection. What a neat way to be in risk-free trades and having a lot of months. August 26 on this one. We had till January 27 and December 26 on the Meta ones. We're in a lot of risk-free trades. Okay, before I get to some questions, I have a lot of news here for you. Zelensky telling Europe, stop trying to change Trump. Really neat article where other people over in Europe are understanding the importance of the United States and understanding how it's time to make it fair again. I really love that. I couldn't find the video, but I believe it was Sweden that basically said, hey, you can't live without the protection of the United States. If you want to go at it and be done with the United States, it won't cost just 5% of your GDP. It'll cost 10, 15% of your GDP. And you still won't have the nuclear capabilities or the expertise of the United States. I enjoy that we're being appreciated. Do they have to? No. Is it important? No. But I do like to see the respect for the United States seen amongst the world again in Europe. All right. Really good article here that I'll have for you. I will post on the My Hurley Investment about the Meta earnings and how they're okay. What, 115 to 135 billion. Why they're okay with the way they're spending it now? Because they're doing their infrastructure significantly different. Great article to see where Meta is going with AI and why the market liked it. This was given to me in a very interesting article on Tucker Carlson discussed the reality or what really is causing Americans to be shackled by high prices. This is nothing more than understanding that the government wants inflation because it makes it cheaper to pay off the debt that we have. It's that simple. A very interesting article on why we want inflation to be lower or gone. Probably will never happen in our lifetimes. I have an interesting article here on anti-money laundering lapses, where a bigger broker was fined way over $1 million because they were not managing their book of business properly. If you want to see how anti-money laundering is still going on, this is the article where you can see how people are doing it and how I hope more of those of us that are risk investment advisors that are allowing it get caught and pay for it dearly. I found this article very interesting about the 5 key takeaways from Wednesday's Fed rate decision. Number 1, we broke a move of straight cuts, and we're probably not going to have another one until the new Fed chair comes in. Like always, there's been a couple committee members that were dissidents. Powell's post-meeting news conference was, in a word, a snoozer. Always has been, but he's gotten significantly better at saying a lot of nothing. I do like the idea that their thought of tariff-fueled boost for inflation never happened. They basically had to admit tariffs didn't cause inflation, and that layoffs are significantly less than were expected. And again, it was a non-issue. This should be our roadmap to March's FOMC rate decision. This is we should hear exactly the same in March, and it'll be a non-issue. Highly successful people do 3 things according to a Harvard expert. Can you do the job well? Are you excited to be here? Do you get along with us? That's simple. How do you do that? You do that by demonstrating competence. You show it by showing commitment, and you show it by aiming for compatibility. I do like to put some self-helps in here, if that might help any of you out in a job. And last but not least, here locally, we had a pension plan freeze where people who've worked and thought they had a pension plan for years are basically getting cashed out. And I thought it was very interesting because documented David McIntyre, senior financial planner for the Desert Mutual Benefit Administrators, said the primary differences between defined benefit programs like pension plans versus defined contributions plans like 401ks, IRAs, Roths are transfer of both risk and the majority of the cost from the employer to the employee. For years, I've told you guys the kickbacks that companies get, the 401ks, it's all a benefit to them. They get an expense, they get a kickback, a certain amount of money goes in. And the pension plan stopped working because they were so poorly managed following the growth of the S&P 500. People ask me, why do I keep telling you that, hey, since the Vietnam War? Well, it's documented here that in the early 1980s, they started phasing out pension plans. It actually was earlier from the Revenue Act of 1978 because they were finding out the pension plans were not working previous to that time, which was the 50s, 60s, and 70s, at being able to meet the rate of inflation and being managed in a way that gave people a standard of living. They went under using the buy and hold. I'm putting this out there for you guys to understand. Pension plans, especially if you're at a state or school level, I know CalPERS out in California has taken some huge hits. Most likely, all pension plans will either go bankrupt and you'll get nothing if you're part of it, or they'll be nice enough to do a small payout to the members of the plan as they shut it down. This is just the reality. But I'm really putting this out here for one more time just to show the things that I've told you are documented in a plan closing here right in my backyard in Salt Lake City. With that said, what questions do you guys have? Are there any questions that I can answer for you guys in the next 15 minutes about anything stock related, stock market related, anything related to a trust, a living trust, the thought of having a legacy trust so that the money doesn't get blown right away or so that it can be passed down over a period of time? Any questions you guys have for me? James, I know you're kind of new here. Nathan Roberts, I know you're kind of new here. Definitely go back 2 weeks ago to the myhurleyinvestment.com. If you go to myhurleyinvestment.com, the blog site, it's going to be right here. 2 weeks ago, I talked about why and how we were going to take the profits off of the Meta elite bull calls and create some risk-free trades or dollar cost average, what we already had in place, truly with doing it on the profits of those short calls. Okay, I'm trying to stall here to see if any questions are coming in. They don't look like any are coming in. Guys, have a wonderful week. I believe we're going to see Brian again next week. If you do have any questions about your portfolios, obviously info@hurleyinvestments.com, or you can contact us directly. Kevin, K Hurley @hurleyinvestments.com, Keeve @hurleyinvestments.com, Brian @hurleyinvestments.com. Don't hesitate to get out there. If you have any questions for us, we'll answer them directly. And all right, guys, hey, have a wonderful evening. I appreciate you guys being here. We should get this posted sometime tomorrow morning. Please jump over to the My Hurley Investment, singular there, myhurleyinvestment.com blog site, and enjoy reading these news articles. I think you'll find a lot of good information in them. Appreciate you guys being here tonight. Have a good evening, and I'll see you here in 2 weeks. Bye-bye.